What's up, guys? It's April 2nd, 2025. Had an interesting day in the markets. I saw the open and thought we were going to rally and go sideways. Well, we did go sideways, but I thought we were going to stay above the EMA for the rest of the day. I left around this area and came back and saw this. And then right before I started this video, I took a peek and I was like, wait, something's not adding up. So, pretty interesting day. Range bound price action. It's a crazy sell off right there. Doubled the range, 200 points. Wow. So, multiple legs lower. This is around leg 3 right here. Then we go sideways. Any leg past leg 3, any leg past leg 2, the probabilities for chain range price action go up. Leg 1, pull back leg 2, pull back leg 3. Sideways price action, bulls have a rally. Leg 1, pull back leg 2, pull back leg 3. Wedge top into the EMA. Double top, bear flag. Sells off. And then the question is this strong to get a second leg, or are we at the bottom of the trading range? I thought this bar was good enough to tag the EMA, and we did. I was not expecting a sell like today's close. That was really surprising to me. Just watching, just looking at it, it was like, whoa. So yeah, let's get into it. We'll be dropping some more membership videos here soon. The trading psychology videos, number 2 is popping up, and then I want to get back into the Al Brooks books and finish the green book and then start trading ranges and reversals and whatnot. So sell off, gap down, bar 1's a bull bar. That's really bad for the bears because you want to see a big bear bar after a gap down showing you that bears are willing to sell. However, we gap down to the low, about the low from yesterday. So around the 10 low, 12 low, the 11 low. Just about the breakout point from the 31st. The breakout point being here. Rallied, sold off, rallied, sold off to around the same level, and rallied again. Gap down, bar 1, big bull bar. Bar 2, good follow through. Bar 3, again, that's a 3-bar micro channel. Bar 4, follow through. So now I think this is changed the context for the bears. If anything, bears are going to get a trading range, bulls want to break out. Why do I say trading range? Because the gap down is considered a bar. So this is a big bear bar. Now we have a bull micro channel. So micro channel down, micro channel up, trading range behavior. Bar 4 is the first pullback, shallow reversal, good for a buy. Bar 6 and bar 7 show that. Leg 1, pullback, leg 2. Bar 7 is bad. It shows you as soon as the bull is popped above the EMA, bears are willing to short. Try to close the gap. Bar 9 is a trading range bar. It's neutral because bears won't follow through and bulls won't follow through. It's just a trading range bar on the EMA. Bar 10, bull bar closing on its high. Bar 11 and 12, bull bars closing on the high. They have more tail. And then bar 13 is a bull bar, but it's closing below its midpoint with more tail. So we could say that's 3 legs up. Leg 1, pull back leg 2, pull back leg 3. Then we go sideways for a brief moment here. There's 3 fractal legs within this within this price action. Leg 1, pull back leg 2, pull back leg 3. And you can see 21 bear bar closing on its low. Bears want to get the reversal back down to the lows here. However, 22 is a good bull bar closing on its high. It bounces off the EMA and reverses closing on its high. 23, good follow through. 24, all these bull bars are really good follow through, and they're mostly closing on their highs. So this is bull trend behavior. When we have multiple gaps open, we think trending behavior. And we do have gaps open. We have a gap open here. We have a zero height gap open here. But what's damaging is it started with a gap down. So there was bear pressures and bears trying to sell. Now we have another 3 legs. So in one of the previous videos, I was talking about how one major leg can be broken up into 3 minor legs. And this is a great example. So leg 1, pull back, leg 2, pull back, leg 3. Leg 1, pull back, leg 2, pull back, leg 3. And then we have leg 1, pull back, leg 2, pull back, leg 3, creating a bigger wedge. A lot of bullish pressure, so the bears didn't get the reversal down. Here's 3 bear bars that look like they should get continuation, but the context is bad. 28, 26, 27, 28, testing the breakout point on 22, and then we rally again. 29, I think a limit order here was a good buy. If you put your stop 1 tick below 22, you don't get stopped out. It comes very close, but you don't get stopped out. 31, it's a bull bar, but it's closing right on the midpoint. Excuse me, 30, bull bar closing right on its midpoint. 31, bad follow through. It's a bear bar closing below its midpoint, but there's no body. It's more of a pullback. Leg 1, pullback leg 2. We're in training range because the bear's got a micro channel here. Just don't know where the top is. Where are we? 32, 33. Bull bar's closing on a high. Good follow through at new highs of the new high of the day. 35, 36, 30. Excuse me, 34, 35, 36, 37. All bull bars. Three of these are even 36 kind of has more tail, so we could say that it's about the same. So there's more training range behavior than trending behavior. 39, bull bar closing on its high. 41, big bull bar closing on its high. I think it's becoming climactic. And then we see that with 41, bad follow through. 42, another leg higher all the way up to 45. So about a minute ago, I talked about how major legs can be made up of 3 smaller legs. Same situation right here. Leg 1, pull back leg 2, pull back leg 3. Leg 1, pull back leg 2, pull back leg 3. There's even 3 legs within this. Leg 1, pull back leg 2, pull back leg 3, pull back leg 4. 45 is climactic after. We know after any leg past leg 2 is training range behavior. We have multiple legs after this leg here. So leg 1, pull back leg 2. Training range because bears got a micro channel, so keep that in mind if you're holding above 45. 46, inside bar. I think it's safe to get out of longs here. We could be in breakout mode with an inside bar. 47, you're risking a reversal. And bears that didn't really get a full-on reversal. They stayed above. Bulls managed to keep the price above the breakout point from the open. But I mean, then we see the after hours. Then we see the after hours. Crazy price action right there. That's crazy. At first, 47 is kind of shallow, and you think bulls are going to continue. Tail, testing these highs right here. 48, bear bar closing on its low. 49, bear bar closing below its midpoint, but has a tail. And then even when you see 50, it's a tail on the EMA. And you could possibly think, I thought there's going to be a training range at least like this. However, I saw 51, 52. I was like, okay, so there's a gap now. Bears are going to look for leg 2. When I saw 52, I was like, wow, that's like 6 bars in a row. 1, 2, 3, 4, 5, 7 8 bear bars in a row. Strong to get at least 1 tick below 53. 54, shallow pullback, first reversal. Just like bar 4 here is a good buy. Bar 54 is a good short. Strong leg, good enough to get second leg up. Strong leg down, good enough to get second leg down. 55, 56, bear bars closing on a low. 57 is a first reversal attempt between these two, and that fails. It's not the first reversal attempt in the overall trend, but for these 2 bars, it's the first reversal attempt. And you ask yourself, is this strong to get second leg down? I would be cautious shorting this low because you would be in a leg 3. But look at 57. Look at 58, 59, 60. The short did work. So leg 1, pull back leg 2, pull back leg 3, right into support. Then you can ask yourself, is this price structure strong to get its own second leg? And we see that here. But training range behavior, any leg past leg 3, any leg past leg 2 is training range behavior. And if we have training range behavior, you expect deep pullbacks. And we can see a deep pullback with 61, 62, 63, testing the EMA, bad fall through 64. 65, 66, bear bars closing on their low, and then 67, big bull bar closing on its high. Becomes a double bottom in a bull regime because we're above the EMA. So that's a bull regime. 68, 69, 70, 3 bear bars, but they're shallow and they're late in the bear trend. So if the bear trend started here, this is a late leg. Leg 1, pull back, leg 2, leg 1, pull back, leg 2. Pull back leg 3. Pull back leg 4. Training range behavior. Did I count that correctly? Leg 1, pull back leg 2, pull back leg 3, pull back leg 4, pull back leg 5. Higher low. There's 3 types of trend line breaks. In this, we're going to talk about the bear leg. Bears want a strong sell, pull back, and a new low to show us that the bear trend is continuing. Leg 1, pull back leg 2, equal lows. That's what the bears got right here. And then if you count this trend line break, 67, This is the worst trend line break. It's a higher low, and that's the best for the bulls. And you can see bulls are willing to buy that. That's bullish price structure above the EMA. We have a nice rally at the end of the day. Leg one, pullback, leg two, deep pullback. 81 testing the high here. Rallies to a new high of the day. Lots of trap bears are going to have to short their position. This is a vacuum in a trading range. And then we see that happening at the after hours. Man, the stock market is crazy. What a crazy. I saw this and I was thinking, wow, we're probably going to have a gap up tomorrow. And now I'm seeing this. I'm like, whoa. Maybe not. Regular trading hours. So, pretty cool day. A lot of tradable legs. Whether you're a limit order trader or a market order trader, there's lots of direction. Wait for a move, catch the second piece. Wait for a move, catch the second piece. Wait for a move, catch the second piece. You could catch the second piece of this leg too if you bought the low here. Trading behavior by the low. Set a limit order below or right around the midpoint of bar 61 or the low on the EMA. When gaps stay open, it's trending behavior. When gaps start to close, that's trading range behavior. So we see this gap stay open in the morning. We see this gap stay open. But then look at these two gaps. They get closed right here. So now we know this is what put us in a trading range. There's price action. Bull channel against the bear channel. That's also trading range behavior. And these two bear gaps get closed on the rally up. All these gaps here are not the strongest because there's more trading range bars. These bars here are all trading range, more tail. And they get closed all around the way down. Now we have about 1, 2, 3, 4, 5 bear gaps. Good enough to get second leg. And all these legs did get second leg except for this leg last year. That's also the fifth leg, so you don't really want to see, it's not really, the probabilities for a second leg with these three bear bars are low. Rally has a gap here, it gets tested, and then now there's going to be a gap right here. Doesn't get painted. I want to see if it gets painted. Okay, yeah, so it did get painted. And trading range behavior, gaps close, and that gap closed. So now we're going to ask ourselves, I think this price action strong to get a second leg down. Whether it happens in the overnight session or tomorrow, I don't know. But this could be a vacuum test of the previous swing low. 15-minute chart. Why does it? I got to change that. We tagged the EMA and sold right off. This is the second touch of the EMA, so there's still sellers at EMAs. The bears that shorted this made 1 R very quickly, so when the price came back, they were ready to short again for another R. Alright guys, hope you guys are doing good. If you have any questions, please ask me. I always love talking to you guys in Discord. Learn something, share the show. Appreciate all the memberships. Thank you guys for joining. I'm going to be dropping you guys more videos and keep asking me questions. I want to build you guys up through a systematic way. Even if you're not in the members, like just ask me questions. And my goal is to get everyone to be a systematic trader. And systematic trading is the fastest way to discretionary. So thank you all for your time. I always appreciate it. If you learned something, share the show. Don't be a hoe. I'll talk to you later. Bye.